What is going on, traders? In today's video we're going to talk about the two-legged pullback, and we're going to talk about measured moves. Now, two-legged pullback is one of the most common ways how market moves. Market likes to move in pairs of twos. Now, why market does this? It is basically tied down to human psychology. These candlesticks on the chart as they are printing, they are the manifestation of human behavior, and it's not changing. It hasn't changed for years, and it's probably not going to change. And the intentions of traders will create these moves on the chart. And market is not moving in the pairs, in just these V-shaped formations. Market is moving in the pairs of twos. Generally, there are little corrections inside of these moves. Now, two-legged pullback looks like it sounds. The reason why we care about two-legged pullback, because if we combine it with the proper market context and if we combine it with the proper key entry point, we can get a high probability setup. Now, how two-legged pullback pattern looks. If you take a look at the structure right here, and you can ignore this gap right here, you can imagine series of bullish bars going higher. This was the bullish trend that the market started with. There was a series of bearish bars that broke the last bullish bar's low. So this was the first bearish leg. So I'm going to copy this and I'm going to measure this, and this is the two-legged bullish move that played out. Why it played out? Because there's also a little trend line and you have a break and a new extreme of this trend line. That's according to trend line rules. After price will break the trend line, traders will attempt to create a new extreme. And I can do the same thing to the downside. Take a look. I have a downtrend working lower. You guys can see the trend line. We draw the trend line because of the trend line rule. We want to see a break and a new low. And just remember, this is just for you to get the idea how two-legged pullback looks and why do we look for them. We're going to go into more details for it in the video. There's the first leg, little pullback, and there's the second leg. And if you can take a look, this second leg is not measured, and that is okay. Not every single time it's going to get measured. Generally, the most measured moves, they're rare. And if you see a measured two-legged pullback, you can almost always count that it's over, that the move finished. This time it's not measured because there are other factors in price action. There's a support and people are buying at the lows of this support. Now, it gets a little bit complicated. There are two-legged pullbacks inside of two-legged pullbacks. And in general, when we're looking for two-legged pullbacks, we're combining the market context and we're combining the key entry points. And we look for two-legged pullbacks mainly as a correction. If you guys take a look and you see this downtrend here, that's the bigger picture. And we're not most likely looking for two legs down. That's not what we want to look. We want to look for two-legged bullish corrections because that is what is going to lead us to key entry points. So with the direction of a trend, we're not looking for two-legged pullbacks. We're looking for two-legged pullbacks as a corrections on a counter trend entries on a corrections. Okay, so I mentioned and I touched on that there are two-legged moves inside of two-legged moves. So this is the first leg down and this was the second leg down. Now, if you guys take a look, you can clearly see that there's a series of legs that were creating the second leg down. You guys can see first leg, pullback, second leg. So you can go a little bit lower and you can measure the two legs that are create overall this one leg, and also there's a two-legged bullish correction. So there is a bearish move down, two-legged pullback, and a second move down. So you guys can see that there are these two-legged pullbacks, and the more experience you get, the much easier for you it is to see. So the price is in a trading range. We are coming from failed breakout, which a lot of time generates strong momentum. We're pushing below EMA, and this is a good indication that the momentum is very bearish, and we draw the shortened trend line. Why? Because we follow trend line rule. We have a break of this trend line and we are not start counter trend trading yet. We wait for price to create a new extreme. We are expecting for price to go here to here. And take a look what you have. You have a first bullish leg, little pullback, and you have a second bullish leg. This is once again the two-legged pullback, and this is how price moves. However, you pushed above the EMA and you want to be selling above the EMA. This is where you need to combine the two-legged pullback with the proper market context. Okay, so two-legged pullback played out here. The bullish correction played out because you have a break and a new high of the bullish uptrend, and this these first two swings set up the trend line. I wasn't looking for the trend line yet at this point on, but once price pushed higher and instantly reversed down, created this lower high. This is the third confirmation of this trend line, and price pushing strongly lower like this gives you an idea where the trend line is. Plus it fits how the two-legged pullback was wide and how it played out. Now you guys can see that we bounced at this support, and your first instinct would be to buy the support and sell the resistance, which is okay, but the safer bet here is to wait for failed breakouts, because another rule in price action is, when it comes to ranges, is that most breakouts of trading ranges will fail. This was good for a quick easy scalp. I don't think you want to look for longs here yet. I think you want to wait for failed breakout here. Now you guys can see that the two-legged pullbacks, like I mentioned, we look for them because we want to combine it with the proper context and key entry point. We can also use the variation of a two-legged pullback in the opposite direction, meaning when we are in a downtrend, not only we look for second entry short, we can look for failed second entry long. Okay, this is the magic of the two-legged pullback. It can give us a second entry at the key entry point as a high probability setup, but we can also use it in a counter trend direction. So this is the new high, and this is the first attempt by the bulls to go higher, strong push lower, and this is the second attempt by the bulls to go higher, and it failed. And the reason why this is a high probability setup, because price is below EMA, it is coming off the trend line, it is two key entry points, a nice big bearish bar. Now I'm going to show you another variation of a two-legged pullback. You guys can see first bullish leg, pullback, second bullish leg. So there is it, and it's a first entry short, pullback, second entry short. This is my first trade for the day. You need to enter with a limit order so you have room to these lows, but you guys can see that there are, once again, you're coming off the key entry point, you're coming off the EMA, so you're combining the two-legged pullback, you're combining the second entry with the overall market context and with the proper key entry point. This is going to make you a consistently profitable trader. You are not pattern trader, you combine it with the context, and that's where all the magic lies. There was another situation where you could add on, once again, key entry points are holding. Once again, enter with the limit order so you got some room here. It can be even slightly lower like this. And then you have this breakout pullback pattern, but I don't think you want to go short here yet, because short here because it's starting to get congested. You're really close to these lows, but this was a great trap. They trapped a lot of people going long directly into these key entry points when you're coming from failed breakout, and this is generating strong momentum. Every single time you see price coming from failed breakout, be very, very leery on the other side of the trading range. As the market keeps pushing lower and it's clearly confirming the downtrend, you guys can see that this is the bigger pattern down. And I told you that we mainly look for two-legged pullbacks as a corrections to sell off the key entry point. But what I can do, since I want to talk about a little bit of a measured moves, when it comes to measured moves, we need to understand the measured moves are mostly for targets for our runners. Measured moves very, very rarely gives us, it is a good enough reason for us to buy or sell, to enter a trade. So I can measure this first leg because this is where the downtrend started, and this was the beginning of a downtrend. So I can measure this, put it right here, and this would be your first measured move. And you're only measuring for two legs because the market likes to move in twos. And take a look, perfect measured move. This is where people took profits. A lot of people blindly started to buying. There's a lot of resting limit orders just sitting here, and this is where the price pushed higher. And you guys can see, like I mentioned, there are two-legged moves inside two-legged moves. First leg, pullback, second leg. Okay, I can even just put it a little bit lower like this to make it more visually appealing. But this is the one leg, and there's a two legs working lower. So you guys can see why we look for high probability patterns so much, why we look for two-legged pullback so much, because price just works like that. It just takes a little bit of experience to train your eyes to see it, but it is there. But you don't have to worry about the two-legged pullbacks all over the place. No, all you'd worry about, you find a key entry point and you're looking at two-legged pullbacks with the trend. Take a look. In this instance, you just have a first leg. Where is the second leg? There is no second leg, and that's okay. This is not a high probability pattern. This is just a first entry short. It is touching the trend line, but it's just a first entry short. So you watch the market go without you. You're only taking a second entry. That's the reason how you trade. Now, as you guys can see, the measured move, we are pushing lower and we are pushing lower. So what you can do, and a lot of times you can use this trick, and this is a very useful trick. If you are in a trading range and you see price breaking above or below trading range, you can use for targets, you can measure the trading range, copy it, put it lower, and you guys can see this is a measured two-tier trading range. This was my target for my runner, because I was holding a runner from this trade. I was trailing the runner. I should have supposed to taken the profits right here. I was trailing the runner. I was trying to be a little bit greedy, but nevertheless, it's all good. The runner was like like $400. I think it was pretty decent runner, $350. Now I like this entry. I mentioned that measured moves are not for entry specifically, mostly for runners as a target. But here you're getting far away from key entry point from this EMA. And the EMA acts as a magnet, and once price keeps getting away from EMA, it's only a matter of time before you will snap back. So this is a big bullish bar, the two-tier trading range, the measured move played out, you hit your target, it looks like we're oversold. You're also coming from the bottom trend line, and it looks like you're going to get to the other side. So this is another plus here, big bullish bar. You can take a buy here following the trend line, following the price action rules. Now, take a look. Once you're working in this correction, you're going to draw your short-term trend line just like all over the place, because you want to follow the trend line rules. You have a break in your extreme. So this indicates that the bullish correction played out. Now, you may be asking me, okay, Thomas, since I'm measuring the moves, why am I not going to measure the move like this? Isn't this the natural instinct here? Look for this. And the answer is absolutely not, because you don't worry about this, because the overall picture is strong downtrend. You guys can see the trend line was holding prices. Price is below EMA. You just have a first break of this downtrend. So your first instinct is to be looking for a new extreme if you're following the rules. You don't even worry about this, some sort of potential second leg working higher. You see break a new high. That's all you care about. Uptrend played out. And price now is working sideways. So you're looking for shorts, but there is no short yet. They're way too big of a bar. You can't risk it. And EMA is starting to get flat. It is in the middle of those bars, and there are bars stacked sideways. This is what it's called a congestion. In this congestion, it is very tempting to both buy and sell at the same time. This is why these congestions are so dangerous for traders. Every time you watch the market and you're thinking, okay, I should buy now, then there is a bar in the opposite direction and you're thinking, okay, no, I'm going to sell now, this was much better. This is already a wrong mindset. You never want to feel like there are two ways for the market to go. You always want to have a slight bias. So if you feel like that, stop trading, avoid this congestion. The best way you trade these congestions, you fade the breakout, just like any trading range. Congestion is a trading range on a micro level. You have a big bearish bar and you have a nice bullish bar, and this is a breakout. You have a failed breakout back to the upside. The reason why I don't like marking this trade, because the overall trend is down. We would fade the breakout. If it broke higher, we would sell. But since we broke lower, you don't want to buy because the overall trend is down, and remember, you're looking for a new low. Now, take a look. Two-legged move is even inside of this congestion. So price keeps moving in the pairs of twos. Okay, I'm just going to keep it here. You have a new extreme. You push back below EMA, indicating bearish momentum, and the fact that you're going to go to make indeed a new low. Okay, because if the bulls are strong, you're going to be back above the EMA, you're going to push higher. It's not happening. You have a new high, first entry long, pull back, second entry long, failure. So once again, variation of a two-legged pullback. This is, however, outside reversal bar, engulfing bar. You're going low at the directly low of the move. I don't like these entries. There was a safer entry. There was a little bit more a correction, sort of like a breakout pullback inside of this channel. And this is much smaller bar. You have a little bit of room. This is the safer entry. It is continuation of failed second entry long. It is just a safer entry. Now, this is going to be a little bit of stretch because you don't have to be looking for micro patterns like this. But there is a first leg, pullback, second leg. Okay, you guys can see first leg, pullback, second leg. There's the measured move. And also you can use something like this. First leg, second leg, and a measure move like this. Okay, obviously there are multiple bars, so this is not a clear cookie cutter entry, but it gives you an idea how market moves. And it is much simpler and much cleaner to see when you have a break and a new low for this downtrend. You already start to, you know, get this inside your head. There's a break and a new low, so there's a two-legged pullback. Okay, I can start looking for longs now. Okay, this is just to give you idea why the two-legged pullback is such a powerful pattern. And take a look what you have. You have a new extreme, first entry short, second entry short. Once again, first leg, second leg. We're at the key entry point. We wouldn't care if we pushed above the EMA, but we were at the EMA. We still wait for a new extreme. So this is a high probability pattern. Same thing right here. Same thing right here. Two-legged pullback with the direction of a trend. So context is good. Key entry point is good. And the behavior. Signal bar could have been a little bit better. We closed at the EMA. I would have liked for close below. But hey, this is two-legged pullback, key entry point. A market created almost a new low. A lot of times, double tops and double bottoms are enough for you to consider it as the finish move of the trend. Okay, you don't necessarily have to create a new extreme. It is preferred, but double tops and double bottoms are close enough. And here you get indication that it is truly close enough because you push strongly above the EMA. Look at these multiple bullish bars going higher. So you know that the downtrend played out with the break and new low, and you're expecting correction or straight up reversal. And once again, you're looking for a reversal pattern. First entry short, second entry short failure, but you're far away from EMA, key entry point. You're going long at the very high of the move. This is a bad reversal pattern. Also, take a look how price moves. First leg, pullback, second leg. So it looks like the two-legged move up. It's looking like you're at the top of the trading range. And take a look, almost perfect. People took profits. People started selling right here. So you guys can see once again, variation of a two-legged pullback. At this point when I was watching this, EMA is starting to get flat. It's looking like a trading range. So I was a little bit hesitant to buy, but at the same time I was hesitant to sell yet either. Because since the downtrend played out with the break and a new extreme and you push strongly above EMA, EMA keeps holding every single time, I need a little bit more confirmations if I'm going to sell the market. Because the overall context, if anything, is looking more bullish. But you know, it's a little bit sketchy here. You got the resistance here. So this was quite difficult to read. Some traders took this long. I can't blame them because once again, take a look. First leg, pullback. Second leg, first entry long, pullback. Second entry long. Two-legged pullback pattern. You combine two key entry points, context, key entry point. This is a high probability pattern. Okay, so hopefully you guys get the idea what you look for. Price pushed higher and there are just a bunch of first entries. You look for two-legged pullback here, but you don't get two-legged pullback. You get only first entries. You're at the resistance or at the support. So now you're just waiting for price to tell you, is this support going to hold or are we going to push lower and it's going to be resistance? You push lower, and once again, when you see strong push below EMA, you're expecting reversal pattern, new high. First entry long, pullback, second entry long, failure. You're going long at the very low of the move, far away from EMA. You don't want to take this. You have a break, so you know what's going to follow. New extreme, and you're bouncing off the support. This is a little fell breakout, gorgeous bullish reversal bar. You're far away from this EMA, so you know you're going to pull back, break, new low, and you pushed higher. Okay, also, it can be viewed as a two-legged move like this. Okay, this is a little bit more advanced because you got multiple corrections in betweens, but you get the gist of it. It looks a little bit like that. But once again, you don't have to worry about this because if you are in this downtrend, you only worry about second entry short. So you get a first leg and you get only first leg. First leg, only first leg. First leg, only first leg. You don't get a second leg. So this is what you would be worried about. You would be looking for high probability pattern, second entry. Okay, and let me see. You have a break new low. So the downtrend played out clearly. Same thing like here. You're looking for reversal pattern, and you're looking for reversal pattern. First entry short, second entry short. Once again, variation of a reversal of a two-legged pullback. You're not touching quite the EMA with the body, but you're inside of this trend line. You haven't moved too far. Everything looks like a nice reversal pattern. I tried to go long here, didn't get filled in a limit order, and market kept pushing higher. And you're doing the same thing. You're looking for Two-legged pullback off the key entry point of the EMA. You guys can see there's the first leg, pullback, second leg. There is no trigger higher, but this is a hidden first entry. So there's a two-legged move up, and once again, first leg, pullback, second leg. So two-legged pullbacks. This is the pattern that you're looking for. You need to combine it with the proper context, and you need to combine it with the proper key entry point. Okay, use measured moves mainly for your targets. This is where you expect for price to correct. This is where you expect for people to take profits, and this gives you an idea where you should take partial profits too. You shouldn't be too greedy. You should take partial profits. All right, so I'm going to see you guys in the next one. Take care, everybody.